Hey everyone, welcome to Capital Expansion Insights. We're all about making smart money moves, and today, we're diving into something crucial for building long-term wealth investing. Now I know what you might be thinking. Investing? That's for people with tons of money, right? Wrong. You don't need to be rolling in cash to get started. Even with a small budget, you can start growing your wealth effortlessly. When you invest, you're essentially planting your money in fertile ground, allowing it to grow and multiply over time. It's like having your money work for you, 24/7, even while you're sleeping. So, if you're ready to break free from the shackles of a regular savings account and unlock the true potential of your money, then buckle up. In this video, we're going to break down everything you need to know about investing, from the basics to the best strategies for beginners. Let's get started. Alright, let's address the elephant in the room. Why even bother investing in the first place? Isn't it enough to just save money in a bank? Well, here's the hard truth. Simply saving your money in a traditional savings account just won't cut it in today's economy. Inflation, my friends, is a silent wealth killer. It's the reason why things get more expensive over time. Inflation eats away at the purchasing power of your hard-earned cash, meaning your money is actually losing value over time if it's just sitting in a low-interest savings account. Let me give you a real-world example. Let's say you have $1,000 and you decide to be responsible and put it in a savings account. Now, most savings accounts offer a measly 0.5% interest rate if you're lucky. After 10 years of diligently leaving that money untouched, you know how much you'll have? A grand total of $1,051. Now let's imagine you took that same $1,000 and invested it in a low-cost index fund that tracks the S&P 500. After 10 years of riding the market waves, your initial $1,000 would balloon to a whopping $2,159. That's the power of compounding returns, my friends. Now I know what you might be thinking. Investing sounds great and all, but where do you even begin? Don't worry, I've got you covered. Let's explore some of the most common and beginner-friendly investment options out there. First up, we've got stocks. Think of stocks like owning a tiny piece of your favorite companies. Apple, Tesla, Amazon, you name it. When you buy a stock, you're essentially buying a small ownership stake in that company. Stocks have the potential for high returns, but they can also be volatile. Next, we have index funds and ETFs, which stand for exchange-traded funds. These are essentially baskets of stocks or bonds that track a specific market index, like the S&P 500 or the NASDAQ 100. Index funds and ETFs are fantastic for beginners because they offer instant diversification. You're spreading your money across hundreds or even thousands of different companies, which helps reduce risk. Now let's talk about bonds. Bonds are like IOUs issued by governments or corporations. When you buy a bond, you're essentially lending money to the issuer in exchange for regular interest payments and the return of your principal when the bond matures. Real estate is another popular investment option. This could involve buying rental properties, flipping houses, or investing in real estate investment trusts, known as REITs. And finally, we have the exciting world of cryptocurrencies and alternative investments. Alright, now that you have a basic understanding of different investment options, let's dive into the exciting part, actually getting started. It might seem intimidating at first, but trust me, it's much simpler than you think. First things first, you need to set clear financial goals. What are you investing for? Are you saving for retirement, a down payment on a house, your dream vacation, or maybe early financial freedom? Having a clear goal in mind will help you stay motivated and make informed investment decisions. Once you know what you're aiming for, it's time to choose an investment platform. There are tons of great options available these days, making it easier than ever to get started. Some popular platforms include Robinhood, Fidelity, Vanguard, and eToro, just to name a few. These platforms offer user-friendly interfaces, educational resources, and a wide selection of investment options to choose from. Now, here's a common misconception that holds many people back. You don't need a ton of money to start investing. Seriously, many platforms allow you to start with as little as $5 or $10. The key is to start small and gradually increase your contributions over time. Diversification is key when it comes to investing. And finally, remember that investing is a marathon, not a sprint. Even with the best intentions, beginners often make costly mistakes when they first dip their toes into the investing world. But don't worry, I'm here to help you avoid those pitfalls and set you up for success. One of the biggest mistakes beginners make is investing without doing proper research. It's like buying a car without looking under the hood. You never know what you're going to get. Before you invest in any stock, bond, or other asset, take the time to understand what you're investing in. Read company reports, analyze financial statements, and understand the risks involved. Another common blunder is trying to time the market. Even seasoned Wall Street professionals with years of experience can't consistently predict market movements. Trying to buy low and sell high is a fool's errand. Instead of trying to time the market, focus on time in the market. The longer you stay invested, the more time your investments have to grow. We've talked about diversification, but it's worth repeating. Don't put all your eggs in one basket. Investing heavily in a single stock or asset class is incredibly risky, no matter how promising it may seem. Emotions can be your worst enemy when it comes to investing. Fear and greed can lead to impulsive decisions that can seriously hurt your portfolio. And finally, don't underestimate the impact of fees and taxes. Be mindful of the fees associated with your investments and consider tax-efficient investment strategies. Listen, I'm going to let you in on a little secret. The biggest advantage you have as a beginner investor is time. The earlier you start investing, the more time your money has to grow exponentially. Even if you can only spare a small amount each month, the power of compound growth will work its magic over time. Imagine two investors. One starts investing $100 a month at the age of 25, while the other starts investing $500 a month at the age of 45. Assuming an average annual return of 8%, the investor who started at 25 will have accumulated significantly more wealth by the time they reach retirement, even though they contributed less money overall. Now, I know starting early isn't always feasible for everyone. Life happens, student loans, car payments, unexpected expenses, it can all get in the way. But here's the thing, it's never too late to start investing. Even if you're starting a bit later in life, the most important thing is to simply start. Consistency is key when it comes to investing. Set up automatic contributions to your investment accounts so you're consistently investing a portion of your income without even having to think about it. So there you have it. We've covered the fundamentals of investing, explored different investment options, and equipped you with the knowledge to avoid common mistakes. Remember, investing is one of the most powerful tools you have to build wealth, achieve your financial goals, and live a more secure and fulfilling life. But the key is to take action. Don't let fear or procrastination hold you back. Start small, stay consistent, and watch your wealth grow over time. I'm excited for you to embark on this exciting journey. Which investment strategy are you most interested in exploring? Let me know in the comments below. And if you found this video helpful, be sure to give it a thumbs up. Subscribe to the channel for more awesome financial tips, and share it with your friends and family. Until next time, remember, master your money, expand your future.